Easy. Go ahead and start the recording. And right now we're in the midst of trying to get this market just a little bit figured out, if we can do so. Let's start by just kind of taking a snapshot at things, because after suffering a bit of a trading beatdown last week, and it was no doubt a beatdown, you always, whenever you suffer losses, the best thing you can do is just kind of take a step back and really just go with trading what you see, essentially. And when you look at what the dollar's done since, even going back to, previous weeks, if we zoom out a little bit on these hourly charts, it's no doubt the dollar's been going through weakness here. The thing that we looked at last week also was, going into the daily charts and looking at some of the key levels that a lot of these things are approaching, which makes the market kind of tough right now, as we've still been going through this divergence, this fundamental divergence in the different economies. But the dollar's weak all across the board, but I'm switching these over to daily charts just to kind of show you where we stand on the dailies as far as key levels and such. Go through here, starting with going through on like the euro, which is one of the ones I'm looking at right now. Right now it's hovering right at here. We can actually go through even one at a time if we wanted to, but looking at the euro, here's where we stand long term. This is what we've been dealing with over the last several years, and I know that's sometimes you got to take a step back in order to look forward, but big trends, this is what we like to be about. And then this is what we've been dealing with since 2015, is just this sideways action right in through here, this consolidation. And when you kind of zoom in here on the daily charts, you can see that the euro is right about this 1500 level, which is where we're at today. You can kind of draw a common resistance level right in through here. I mean, it's not pretty, but you can see that we're right at a key level right there on the euro. Pound, not much different here on the pound. Just we started to get a key level break right in through here, right at this 4600, 4700 level. We had this big upturn in the pound that tried to get up to that 4700 level, couldn't quite get there. And you could really go through all the currencies, and most of them are hitting some kind of support or resistance. Like right down here on the Swiss, you can see all these tails, all this support right in through here at about the 9600 level, or 9500. Yeah, it'd be right at about 9600. This is where we've been through from the month going forward, where Swiss has been getting stronger versus the dollar. But then again, you look at it long term, and we've had some crazy moves there on the Swiss. It doesn't quite look like the euro, just because of some of the circumstances that have happened going back a couple of years. I'm sorry, let me go to the daily. Kind of see right in through here. There's our support level there on the Swiss. There was the unfixing of the exchange rate. Sorry, it's right more like at the 9,500 level. It's kind of making a little 78.6% retracement. Yen, much the same. Looking at it on the daily chart. Get this switched over real quick. This is one to where the yen, starting with the the monetary policy decision last week, this one's actually broken through into new lows. When you look, I got to go back to daily charts. This one broke through into new lows, after the unfixing of the monetary policy decision last week, and it's really kind of coming down and approaching where this low was right down in here. Just total reversal from its sideways action right up and through, it was sideways for quite some time, then it's broken down it's one of those things to where you look at the markets right now, and even though the trends don't make sense, you got to kind of, we're either going to get a continuation of this dollar weakness in which we've been seeing, because that's really what we've been seeing. I mean, dollar is really driving a lot of weakness in the markets right now, and it's a tough market to call, because whenever the market's kind of approaching some of these key levels, like let me go to the euro dollar here and just show you what my thought process is. My thought is, with some of these key levels being approached, if you will, on some of these main currencies, the euro is a good example of this. We got this trend line forming right in through here. Let me take this resistance level off. My thought process today was actually pretty simple. You can see it came up and hit its head right off 11500, right up and through here. So my initial thought looking at the markets this morning was, you kind of see the trend lines kind of going sideways right in through here. It's starting to show a little bit of selling pressure there on the euro. Was essentially, just trade in either direction. Meaning, my first thought was, you know what? If we can get a breach of that 1500 level, I'd be willing to buy euro dollar. If we get a break below this trend line, I'd be willing to sell it. And that holds true for quite a few of the currencies and the current positions in which they're at, is essentially just waiting for the market. It has been kind of consolidated, it has been consolidated since Friday, really. I mean, not much going on since Friday. We have had this consolidation, and there's a lot of things happening right now to where, the only key news really today is that you have a couple of central bankers coming out and speaking today. You got Mario Draghi talking at about 10 o'clock in Asia, ironically enough, the other country that's involved in aggressive monetary easing, just like the ECB is. And then you got Thomas Jordan, the head of the Swiss National Bank. He's coming out and talking. Let's see here. I forget what time he's talking. He's talking at 1:25, about 1:30. Yeah, I figured it was right around 1:30 or so. Thomas Jordan's coming out. Thomas Jordan's actually, Draghi's not really, is just kind of speaking at this Asian conference, but Jordan is actually speaking on European and Swiss monetary policy at the Europa Forum. So he's Euro and Swiss monetary policy at the Europa Forum, and that could get actually quite interesting, because we all know that he's going to be overly dovish and concerned about the exchange rate on the Swiss. So, that could actually bring these European currencies lower. One of the things about central bankers coming out and talking is that you don't really have to wonder what they're going to say. Is they're going to talk dovish. They're not going to be all rosy. They're not going to paint a rosy picture of their economy. So for this Monday, it's a start of the week. And by the way, the London markets are closed, or the UK markets are closed today for a bank holiday. When you go through what all the markets have done overnight, global markets are really mixed. Asian markets were down. European and US futures are up. London markets are closed. The Nikkei was actually down about 3%, or a little bit over 3%, but it's closed from the 3rd to the 5th as they observe a bank holiday. So it was just really open on this one day. I think I forgot to delete this right in through here. News today, central bankers. You got the ISM manufacturing coming out at 10 o'clock for the dollar. I don't expect that to be a big mover. You got Draghi speaking at 10 a.m. in Asia. And then you got Thomas Jordan. He's with the Swiss National Bank, speaking at 1:25 p.m. in Europe on monetary policy. Draghi will probably talk about monetary policy, but you don't have to worry about them turning the Swiss stronger. The one thing they don't want to do is say anything that would turn the Swiss stronger or the euro stronger. So, it may not be a market driver. That's what I'm trying to say, is that neither of these central bankers coming out and talking today, I don't expect them to be big drivers of the market, meaning driving the market, totally up or driving it weaker. But, if you have to side from following these guys so much, you would certainly side more to the dovish side of things, because, I don't think they're going to come out and say, oh, the Swiss economy is doing really good, or the European economy is doing awesome. Nothing to worry about. Everything's working wonders for us. They both have to be pretty, I would say pessimistic as far as what their exchange rates are doing. So strategy for today, we will call it trend and counter trend moves. Essentially, trade what we see. It's a new week. We can take some chances, I believe, but probably don't want to take too many chances here today. Just look for good, strong confirmation on what we see. And then no need to close trades before 5 p.m. That was just something to where I didn't put anything in on Friday. And we'll start here with the euro. In fact, since it's kind of approaching that level, we'll start with more of a sell trade here, which doesn't look like a bad deal. You can see how sideways it's been through this. It's almost a slight divergence right in through here. As this has gone up, this has been just moving sideways. And I would like to take a sell entry, close below trend line. And if you're using PitView, you would want to be using a -5 on the 1 hour totals. This high right in here, almost right at 115, almost exactly. Stop, 1.15, we'll call it 0.30. One thing about the big moves these things have made up is that since it is a Monday, is if they make moves down, they may make some significant moves down. I would have no problems putting in a 1 to 1.5 risk reward on this, because if it breaks trend, then I think that we can get some further downside moves there on the euro dollar, or downward momentum. Because essentially you're trading a reversal, so you got obviously you have plenty of room to go down. And we'll just start here. US dollar strength. This is certainly counter trend to what the dollar's been doing. There we go. But on the flip side of that, all we got to really do is just delete that thing right there. We can bring all these things down. And then put an up arrow. And then just edit this to buy entry. Close above the 1500 level, which is right where it hit its head. Stop on this. I would just put, you don't have to put it that far away. This low right here is 114,681. And 14,671, right below that low. And then you can put your limit right up here to the upside. And again, 1 to 1.5 risk reward. And either way, you'd be trading essentially you're trading a consolidation breakout on the euro. That's essentially, that is exactly what we'd be trading today on the euro dollar, is just looking for a break of consolidation. And I'll just put trend, counter trend moves. So euro dollar. If it breaks that 1500 level, I mean, it's got plenty of room to run to the upside, because it's certainly breaking, it would be breaking a short-term and long-term key level. So it all really boils down to, which way are you going to decide to go today, Mr. Euro Dollar? We shall see. The same from a buying standpoint, and here let me switch all these back to hourly charts so you can get a better view of what's happening right now. I had these on dailies, just kind of showing you some of the key levels that we're starting to reach on those, but I think you get the picture that, the yen is another good candidate for selling today if we were to get any type of market sell-off. We'll go through that here in just a little bit. But let's go over to the Swiss also. Euro probably has better opportunities to sell. The Swiss, I like the idea of buying it above this 9600 level, because it would be a nice little buying opportunity. It's not much of a, whoops, I'm sorry, I'm not going to the previous high. Let me see here. There we go. Go down through here. So it was already looking, there's the trend line that I was looking at. I was looking at this trend line that was coming down here, and it looked like it was about to breach it and breach that 9600 level as it was going in the overnight hours. And you can see it almost did. And you kind of bring this a little bit up a little bit. You can kind of see this is forming from this peak high. There we go. To the current level, it's also, one, at least two, and this could be a third bounce from it. You never know. Trend line's really not important there, because anything that breaks above this 9600 level would be breaking, the shorter term trend on the dollar Swiss. Euro dollar, dollar Swiss, we'd basically be trading the same thing, but that's another opportunity you could look at as an alternative to the euro dollar. You could look at this, it is sidling out a little bit down in here. It's starting to flatten out down here at the bottom. A buy, for above 9600. And just because Thomas Jordan's speaking here today, this would be an alternative, kind of a, whichever one happens first between the euro dollar and the Swiss. In fact, I can zoom in quite a bit on here and not have to worry about anything. There we go. Yeah, that 9600 level, it's having a hard time breaking up above it. But since Thomas Jordan is speaking today, wouldn't be a bad idea to be on the short side of the Swiss if this were to execute first. If the euro dollar trade executes first, then take the euro dollar trade. But if it starts to sidle out and you see this start to break up above 9600, It's not a bad place to be. And all you got to do is put your stop right below this low at 0.95606. And then the limit here, again, could get some help from a central banker today. Although Thomas Jordan is somebody that we're pretty used to Thomas Jordan coming out in the market and saying, hey, the Swiss is ready to intervene. We're ready to intervene in our currency price at any time. So far, I think that because of the liquidity in the market, they've been kind of empty threats, but it's certainly something that could help you. I mean, they're not going to say anything hawkish. They're not going to try to say anything that's going to help their currency. But on the short side, going short the dollar, I favor going long on the euro. There we go. So we got that one in there. I'm going to kind of take the commodity currencies out of the picture at the moment, just because commodities, they're a little shaky here. I mean, oil's kind of mixed here. Gold's up slightly, but Aussie's been another one of the weak ones here. New Zealand, that's one that I really liked last week. I'm going to kind of give that one a rest. It's sitting right at that 7,000 level, but it's already coming up to a 78.6 level. I'd kind of favor buying opportunities on these if these weren't approaching, levels that I really just don't like. So I'm going to give for today, I'm going to give the commodity currencies a bit of a rest. I'm also going to give the pound a bit of a rest here also, just because it's a banking holiday over in there. One trade I was kind of considering here this morning, but I'm not, not now, is the fact that it looked like it was stalling right in here at a 78.6% retracement. It tried to come up. It came almost up to almost like the euro, it came up to that 4,700 level and it started to fall. And this one's actually been, experiencing quite a bit of selling pressure near these tops. Here's that big candle on that daily that showed, that it bumped up. It bumped up like 50 pips right here towards these highs. But going to give the pound a rest just for right now, because with their markets being closed today, I think, with the lack of liquidity could also turn into a lack of volatility volatile movement. Volatile whipsaw movements is the word I'm looking for in their underlying currency exchange rate with their market being closed. So if there's not a lot of liquidity built up in that market today, you probably want to stay away from it more than anything. And then our other dollar weakness position, the yen is another one where I'm kind of looking at this one to where you could almost trade it in either direction. You can see right in through here that it's been making this ceiling right down, it came down. Yeah, this isn't right at the 107 level, but you can see this little formation occurring right in through here where we got, you got a little bit of an ascending or a wedge formation happening here at the bottom. Doesn't look like much of a trend line, but it actually is. I mean, this is closing right on here, a little horse poking its nose through the fence line, but it's been just sitting here hovering. This is what I mean by trend counter trend movements, is based on what we're seeing right in through here. You had this low that came down and found a huge amount of support here at the 106 level, and then you have this this horizontal resistance level, which is essentially right at the current price. to where if it broke through, especially if it breaks through this previous high in here, you could see some appreciation possibly on the dollar-yen pair. But if it were to break lower, and just to make this easy, I know this isn't a perfect little trend line in here. You can, yeah, there you go. There's an intraday trend line right in through there. You know, low, 1, 2, 3 bounces. That's not pretty, but you know, it'll do. Essentially, if it breaks down below this level is what you'd be looking for. If it breaks down below this low, you could look for selling opportunities once again on the yen. A lot of this is anybody's guess or ball game as far as what direction these are going to go today, but we're giving it our best shot here. But yeah, the yen, start with the sell side of the equation. If it breaks down lower, you know, if it breaks down at all here, you know, it could come down towards this 106 level and give you some room for a sell trade. I wouldn't take it as a 1-to-1, 1 to 1.5 risk reward. But I would certainly take it as a potential for reversal. So break of trend line, close below this low. I think it could come down lower. This thing's extremely volatile. Stop 106 point. We'll call it stop 106.761. Essentially, this is almost like a 3-bar reversal that you're looking for in here. And you could go with a limit of 1-to-1 risk reward to the downside. And remember, you don't have to take all of these. This is just one of those situations where you can kind of go with sell into basically a break of consolidation. And then a buy entry. Looking for a close above that resistance level. You put your stop right in here at 106.451. Now on the upside on the yen, take that sucker. To the upside, I think you can look for a 1 to 1.5. The downside, I wouldn't look very much into a more than 1-to-1, just because of how much support there was down at that level, at that 106 level. You could look for a smaller amount of reward potential to the downside. If you wanted to go for higher risk reward on that, you'd want to be keeping a keen eye on it as it approached the 106 level, you know, right down in here. This was like 106.121, the support level. So, I mean, it certainly has room to get down there. I'm not exactly itching to place a trade right now on anything. Today is just going to take some patience, and you got to allow yourself a little bit of room for confirmation. If there was a day to be kind of conservative about your confirmations, I think this would be it. Especially with the UK markets being closed, and then also, today the Nikkei was open, but the Nikkei is going to be closed from like the 3rd to the 5th. Thank you, Philippe, for letting me know that. I'd almost forgotten about that on Friday. Well, I did forget about that on Friday. But all of these could be pretty substantial signals today. You just got to wait for them to come to you. And of course, not to sound like a broken record, but on a lot of these opportunities, the scary part about all these opportunities is like Swiss, Euro, Yen. At some point, the central banks for these countries are going to have to do something to stop the bleeding on their exchange rate appreciation. I mean, it's fascinating and frustrating at the same time. And I've talked quite a bit about, the divergence in all these economies, to where, I use the stock example. If these currencies like the euro, the Swiss, and the yen were stocks, they'd be trading on the pink sheets right now. They'd be going down. They wouldn't be going up. But this isn't the stock market. This is the Forex market, where things like risk on and risk off and supply and demand have different effects on these individual currencies. So there's always a bit of a hesitation because of the fact that, for the simple fact that you really don't have a huge amount of, you don't have a leg to stand on when it comes to any type of, confidence in the fundamentals backing the technicals. What I mean by that is the scary part of wanting to go long the euro. And this is one of the reasons why I think it was Phil Harris who sent me the email on, yeah, it was Phil that sent me the, Goldman Sachs profits in currency trading are down 40%. Don't think that we think any different than central bankers do, or that professional bank traders trade. Because, when it comes to trading these markets, the scary thing about going long the euro or long the Swiss or long the yen is essentially, that hesitation in the back of your mind that at some point these central banks have got to do something drastic to try to stop the bleeding on their exchange rate appreciation. It's always hard to buy a currency when you know the underlying principles of what drives that economy and the underlying principles of the central bankers that run these economies. It goes against what they want. Central bankers generally win in the end. We're in different circumstances than we've ever been from a global economic standpoint than what we were 10 years ago. But it's always hard to go against. It's always hard to go against currencies or to trade in the direction of currencies when you know that every time these things tick, like the euro dollar ticks up or the yen ticks down or the Swiss franc ticks dollar Swiss ticks down, that Thomas Jordan or Hirohiko Kuroda or Mario Draghi are just sitting there probably beating their heads against their desk going, why is this not working? Why do people still keep why is there still money flowing into our currency when we have negative interest rates and we're printing all this money, but why? And we talked about that argument last week of why why people are saying, is this easing, this QE and all these easing programs, is it working? And I think it's pretty obvious that right now, especially with the yen, the Swiss, and the euro, that it's not. So that's where I'm going to be at today is, you can pick, euro dollar, dollar yen, and essentially just, make the decision to trade it in either direction is what my thoughts are. Euro dollar, trade in either direction. Dollar yen, trade it in either direction. Whatever you see. Dollar Swiss, I like the buy side of that equation a little bit more. I'd rather go long the euro than I would go short the dollar Swiss, just because you got Mr. Jordan talking here at 130. So that's where I'm going to be hanging my hat today when it comes to trading opportunities. Just kind of waiting and trying to wait and see what occurs with the technicals here. Just looking for those technical breakouts in either direction. And of course, if I knew where these things were going to go as we start the week, I would probably not be sitting here. So, because we are speculators. I don't know why I feel the need to say that sometimes, but yeah, we're speculators. When you trade any market, you are most certainly a speculator. Let's take a snap. Let's see what's going on with the U.S. markets right now. The Dow's up 45 points. Stocks are actually kind of mixed because you got the Dow's up, the S&P's up 5 points, and I believe the NASDAQ's actually down. There must be something. No, it's up now. It just ticked up. It was down a little bit. NASDAQ's up 2 points. It was down a little bit there at the market open. So we are getting a positive market open. So I guess you could say we're getting a little bit of risk on in the markets right now, but who knows how that will treat these funding currencies, the yen, the Swiss, and the euro, but we'll take a shot at them nonetheless. Let's see here. Somebody was asking about, well, what about, these three over in here, New Zealand or Aussie or CAD, since they have been a bit stronger. I still like New Zealand. And you look at it on here from these swing highs that it had back in April, where we had this dollar strength kind of driving New Zealand. I would look at New Zealand the same way I look at that I'm looking at euro dollar. Like if I wanted to pick a commodity currency to trade today, I'd certainly go the direction of trading New Zealand, just because it gives you the best. You see where that 78.6% retracement level was. So if you wanted to go into something that was a little bit more of an easy technical play, here's another easy technical play for you too. If you wanted to go into the commodity currencies, it's probably going to be driven by the dollar, but you have a double top right here at the 78.6 level, right? If dollar strength rules the day here, and you get a true retracement, you could look for a sell if it breaks down below that double top, or you could look if it basically breaks through if it breaks the double top high. I mean, this is really a double top right in through here when you look at it. I mean, this is, double top right at the 78.6 level. So if you wanted to go into a commodity currency, this, just like the euro's given us the kind of the same look, if you will, as far as the consolidation that it has right now. But if I had to pick one of the commodity currencies to trade, I would probably go with New Zealand, just because it's given the most obvious, obvious trade entries. If it breaks down below this double top right in here, it'd probably be breaking below a trend line also. So it'd be breaching probably this short-term trend line right in through there. So if it breaches down below that double top formation, then you could potentially see some depreciation in New Zealand. If it breaks above that double top formation, and you could probably, with it being a commodity currency, look for a higher risk reward ratio on that. So yeah, I mean, if you're going to trade one of the commodity currencies today, just like on the euro and on the yen, you could trade New Zealand either way, whichever way it breaks. If it breaks through these highs, it's probably going to make a run up to that previous high. And if it would be breaking, through that 78.6 level, and it would certainly have the potential to make higher highs. If it breaks the trough of this double top formation, then certainly it could come down and sell off a bit and make some lower lows, and it has plenty of room to go. And either way, you could look for a 1 to 1.5 risk reward. So New Zealand is certainly one that you could trade in either direction today also. And if I had to pick one, that would be the one I would pick as far as directional trading goes, because that's where we stand right now, is just waiting for the market to pick a direction and hoping that the first knee-jerk reaction that it has is the correct one. So essentially that's what it boils down to, is trading what we see, which I know isn't exactly stellar advice. Today is really today we're really just looking, the simple theory of consolidation breakouts. All we're hoping for is that once these things do break their current levels of consolidation, that it's not a head fake. That's exactly what we're gambling on today, is that once these things break their current consolidation levels, we're hoping that there is, that's going to be the directional move. And we're hoping that it's not a whipsaw. So we're trading with a little bit of hopium, and we'll just have to wait and see if that works out for us. Sometimes I think people may watch like YouTube and stuff and go, wow, this guy's a real expert. Essentially, if it breaks out this way, buy it. If it breaks out this way, sell it. But sometimes that's the way you got to go, especially during times of uncertainty. And like right now, what we're looking at is, when I speak of uncertainty, this really isn't trading fundamentals. This is trading purely technical. There's no fundamentals backing any of this. This is all just pure technical. So let me go ahead and get these saved. So I can give a sheet. So there's your trading sheet for today. And about the only other thing we could say today is just be careful. All right. So we're going to go ahead and drop things here. That's all I got for today. Nothing in the afternoon or further this morning. So until tomorrow morning, where we got a pretty busy day. Got to play some catch-up work from last week, but that's it until tomorrow morning for everybody. So until then, I'm going to sign off here, and I will chat at you later. So thanks for coming in, everybody. Bye-bye.